Good morning, everybody. We thought we'd give a market update today with some very big moves in local markets and also markets around the world as inflation concerns and lifting interest rates as markets nervous. So looking at our local market, since the start of May, we've fallen around 800 points, which is quite a large fall. It's over 10%. So really the market is probably into a bit of a bear market at the moment. But with that big fall has created a lot of great opportunities. So we've got a bit of a shopping list of stocks that we're definitely looking at internally, and many of our clients are looking at as well. So we thought we'd highlight those for you. So stocks that we're looking to buy: CSL, which is obviously the big blood plasma business operating locally and globally. At the moment, they're around $260 a share. We have a target price of around $300. CSL doesn't really pay a yield. It's very much a growth-focused stock. And we feel if you can buy the stock under $266 or $264, somewhere in that range, you're buying very good value with at least 10% upside, if not more, in the stock over the next 12 months. Another stock we really like is Fortescue, and many of you would have heard us talk about that in the past. So at the moment, Fortescue is under $20 a share. We target around $22.50 as Fortescue's price for the next 12 months. And the great thing with Fortescue, it actually not only is a growth stock, but it actually pays a really, really good dividend. The current yield is 15%. Now we think that's a little bit high. We think there will be a bit of adjustments to that as dividend levels come back to more realistic amounts, but still expect a dividend of probably well into the 7 or 8% mark for Fortescue. Another stock we really like and is really a very much a market leader in the Australian market is BHP. Currently, BHP is under $44 a share, and we think that's great buying. Our target's $48. BHP, based on historical yields around 9%, there may be some small changes in that yield as BHP have now sold off their gas and energy assets to Woodside, but we still expect very, very good numbers. With China starting to reboost its industrial production, that should really push growth through BHP and definitely Fortescue as well. Another company that looks very cheap is Macquarie Bank. Macquarie reported great results in early May, paid a very good dividend, but since then has fallen back as markets have got nervous on rates, because obviously for Macquarie, interest rate levels is something that's important to them because they borrow money to finance many of the big projects that they do. But still, we think Macquarie is a very, very good business, and it's one of the companies that's always had the ability to beat the earnings expectations the market has. It's something they've really been probably one of the best at in our market. So we've got a target of around $190 a share over the next 12 months. So we think if we can buy it under $168, we think that's a really good price to get into the stock. The last stock we've got on our list that we're highlighting at the moment is WAM. Now, WAM is basically a listed fund manager. They target sort of yield-based stocks. They probably own around 200 different stocks in the Australian market, many of them small to mid caps, some large caps as well, but they pay a yield of around 9%. Currently, they're trading around 175 to 180, and we would see that as a really good price to buy the stock at, with a target of somewhere around $2.20 a share. The positive thing with WAM is you've got a very, very well regarded and well respected fund manager in Wilson's Asset Management running the business, and I think that's a really good highlight. If you can get exposure to the brains of that group at a cheap price, I think that's a very good opportunity. The final thing I'd like to point out this morning is an opportunity that I've always looked at in my many years in the market is if you can buy Australian banks at yields of better than 6%, it's always a good opportunity to do that. Our banks are very good at continuing to deliver good earnings growth, and right now both ANZ and Westpac are paying yields of over 6%. So definitely look at those and have them on your shopping lists. Hope that update gives you some ideas and makes you feel comfortable where the market's currently at. Bye for now.